If you want to invest in an Airbnb but feel stuck because you don't have the capital, this episode could completely change the game for you. Most people think that the first step to buying an Airbnb is saving for years and taking on risky loans. Meanwhile, they've got tens, sometimes hundreds of thousands of dollars sitting in their IRA or 401k and have no idea they could be using it to buy real estate. Today, an IRA expert who has seen a 350% increase in his clients using retirement accounts to invest in short-term rentals is breaking down how you can legally use your 401k or IRA to purchase an Airbnb without triggering any taxes or penalties and turn that stagnant retirement money into real, tangible cash flow. Let's jump in.
Owen, a lot of people want to invest in Airbnbs for financial freedom, but they feel stuck at the very first step, capital. What are the ways you're seeing people actually find the money to invest in their first Airbnb?
It's not exactly publicly advertised out there that you can use retirement dollars to go into real estate.
I think that option of using retirement money surprises people. So how can they unlock that equity in the retirement account to invest in an Airbnb? And why don't more people know that it's even possible?
It's really not that well known. So only 4% of IRAs in the United States are self-directed. So meaning it's not in managed money. Most folks don't understand that if you have an IRA or 401k, you can move that money over to a self-directed account. And then from there, we can use that money to invest directly into real estate and a wide range of other investments also.
For our listeners and even for me, everybody knows what an IRA is, but specifically, what is a self-directed IRA in plain English?
In a nutshell, a self-directed IRA allow people the freedom and flexibility to invest outside of Wall Street. So you can invest that money into real estate, private companies, private lending, just a wide range of other items that aren't directly in the stock market.
Okay, so you specialize in self-directed IRAs?
We do, yeah. Advanced IRA, we work with just over 17,000 clients nationwide. We allow folks to invest into a wide range of alternatives, not just the stock market. Our clients are focused on investing into real estate and other investments.
And what was the statistic on roughly what percentage of your self-directed IRA customers invest specifically in short-term rentals?
The latest estimate that we had was between 18 and 20%. We can't really get the exact number because we have a lot of clients that use what we call a Checkbook IRA, LLC, to invest into Airbnbs and rental properties. But we have seen over a 350% increase over the last 5 years alone for people that are going into short-term rentals. So again, it's an area that we're certainly seeing a lot of traction.
Okay, so what does that tell you about where real estate investors are heading?
Investors are getting a little bit more hands-on with real estate. Investors are not just looking to buy a simple like duplex or a long-term rental. They're looking to buy something that they can use for short-term rentals. So we are seeing that category really expand nationwide, right?
3.5 times. Wow.
Yeah, just over the last 5 years, it's a really big increase.
In your personal opinion, why do you think Airbnbs have become such a popular investment vehicle compared to more traditional real estate?
With the Airbnb, the customer is ultimately in control of that piece of real estate, so they can set the rates. Basically, it's going to just allow for heavier cash flow to come back into the IRA account when they own, for example, a short-term rental property that they're using for Airbnb versus a longer-term normal rental.
We say that all the time. We say that Airbnb investing is the highest cash flow return possible from real estate that we've ever experienced.
Cash on cash returns. Would you have any stories of any clients who used self-directed IRA to invest in Airbnb and ended up exceeding their original expectations, either financially or from a lifestyle perspective?
We had a client, they bought a property back in 2018 for $240,000. They basically had it out as a long-term rental for 1 year with one person that was in there. They were charging $2,000 a month rent. So that year they made $24,000 in rental income. The very next year they listed it on Airbnb and immediately they saw an increase. That next year they had over $36,000 in rental income from the short-term stays in that property. So you add all of that up together, it really paints the picture of short-term rentals really cash flowing a lot more versus a standard rental property. And we see that all the time.
Wow. So yeah, you compare that to what the returns probably would have been if it was just in the stock market, compare that to the S&P, they 50% increased the cash flow.
Yeah, if you compare that to a normal market return of like say 4%, 6%, 8%, I mean, it's going to greatly exceed that. It's probably going to be more than double that if you break down the numbers long term. So that's absolutely correct.
Okay. And so you're talking about that client's Airbnb making a much higher cash flow. Owen, you work for Advanta IRA. When I looked them up, I absolutely loved their stance on their clients' investments. You don't take a one-size-fits-all approach. Instead, you help your clients align their retirement account with their preferred investing strategy so they're able to invest in what they actually know and understand. Now that we know where you're coming from, quick break before we jump back in. If you're an Airbnb host chasing financial freedom, but suspect your pricing strategy is costing you thousands in missed revenue, this is for you. Our revenue management service strategically optimizes your pricing and occupancy to extract the most income from your listing while you stay in control of guest communications. It's $300 a month, which is usually covered by just one extra booking, and many of our clients double their monthly cash flow. Head over to airbnbrevenuemanagement.com to learn how we can help you. All right, back to the show. Can they actually use that income, or does it have to stay locked inside the IRA?
When you own real estate inside of an IRA, that money's going to come back in. So the idea is that it's going to be part of your nest egg for retirement. Now, once you hit the age of 59 and a half, you can totally take that money out for any reason. It's just going to be a normal distribution at that point. If it's a traditional IRA, you would just pay your normal applicable tax bracket on those withdrawals. If it's a Roth IRA, again, completely tax-free, no taxes whatsoever. So if you are below the age of 59 and a half, the only thing is that 10% early withdrawal penalty that would come into play. So I always try to tell people that if you really need to take that money out, then you are paying the extra 10%, but it is available for withdrawal if you need to.
Okay. You mentioned Checkbook IRA a little earlier. What is the difference between just a self-directed IRA and that Checkbook IRA, and how should someone decide which kind of path is right for them?
So Checkbook IRA, that's another category that's really increasing in popularity under our roof. The use case example for doing a checkbook versus a normal IRA, it really comes down to the property. So what I mean by that is if I own a rental property inside of my self-directed IRA, and let's say I have some expenses that come up, I need to pay a contractor, I need to make a payment out of the IRA, you would reach out to the account manager to actually request that money to come out of the IRA to make that payment. So there is kind of that back and forth. We have to request money to come out. We fill out a digital form, money goes out the door. Versus with a checkbook IRA, the individual who has the property has direct hands-on control. So what we usually tell people is that if you have a number of renovations that need to be done, if you're expecting having to write checks out of that account on a regular basis, or if you're buying like a property at a sheriff's auction or a live auction where you need to have a check at that time to buy that property, that's when the Checkbook IRA LLC is going to make the most sense. So the idea is that if I buy a fixer and flipper property and I want to turn it into a long-term rental property or use it for Airbnb, I need to do a lot of rehab work on it in order to get it to that place. Then having a Checkbook LLC IRA setup is going to give me that direct control to basically take that money out as I need to.
I'm just kind of running through my own experience in operating Airbnbs, that there's a lot of checks that need to be written. It'd probably be a lot easier just to write those checks from the Checkbook IRA versus bothering the account manager for each one of those expenses.
You can submit for it online as well, but we see a lot of those folks go the checkbook route just for that particular reason. And it's really not complex to set up at all. It's quite easy. You're just basically setting up an LLC entity, and the IRA is going to be listed as the owner member inside of the LLC. So once that's set up, we choose a bank account, we send the money over, then you're pretty much off of the races at that point.
Okay. So I'm basically operating a company, an LLC, within the IRA.
Yeah, so the IRA is going to be considered the sole owner member of the LLC entity.
Got it. Are there any important rules that people need to know about who can stay in the property owned by the IRA? And where do people tend to get that wrong?
Yeah, that's usually question number 2 when I'm talking to people is they read about what we call those prohibited transactions. So prohibited transactions are specifically listed in IRS code 4975. Basically, it's just listing off the things that you can't do with real estate that you own inside of a retirement account. The main ones would be like if I'm going to rent that property, I wouldn't be able to rent it to somebody that's in my direct lineal family bloodline. What I mean by that is mom, dad, and then son, daughter, or spouse. So basically, I can't rent to those people. They can't receive any quote unquote personal benefit from that property since I'm the owner of that property. Now, what I can do is I can rent it to a brother or sister is totally fine. Cousins, distant family members, that's all totally fine. And then, of course, it would also include yourself as well. So if I own a property inside of my IRA, I can't vacation in that property. So I can't have extended stays in that property. And then I also wouldn't be able to do any of the direct work myself as far as like doing any rehabs to that property. But I can hire anybody else to do that work for me that's not in my direct family bloodline.
All right. So If you can't vacation there and you can't work there, are there any other ways that you could stay there?
Yeah, so the IRS code is fairly vague on this. So if I have any sort of maintenance that's being done or there's a construction job that's happening, obviously the owner is allowed to be there. So a lot of that really is up to specific interpretation. And we've heard many different interpretations of that over the years. But just to keep it on the safe side, again, you would just want to not do vacations in that property, not directly work on the property yourself and make any structural changes.
That's how I kind of looked at it. You'd mentioned from a management perspective, do investors need to have a property management or co-host when they're using the strategy? Or can they be hands-on managing the listing?
They can manage the property themselves. That's another common. You can set that up on the Airbnb website if it's on there. You can be in the driver's seat as far as choosing the tenant. And you can also choose a property manager as well if you want to go that direction.
Okay, but you can manage the listing then.
Yeah, so they can manage the listing. That's all totally fine.
Thanks for clearing that up. I had taken that the wrong way at one point in my life.
So this seems like the perfect place where you're like, this is purely an investment. We don't want to stay there. We don't want to vacation there, but we do want our money working hardest for us, making the highest possible return. We can save money not having a management company manage it ourselves. Just don't have the idea of like, oh, I'm going to buy my dream house and vacation there half
Spend
the
3
year.
weeks.
Well, it's in my IRA. That's
a no-no.
No.
Exactly. I will just add to that though, if the individual owns the property in the IRA, and they wanted to eventually vacation in that property, one exit that they could think about doing is they could distribute that property out of the IRA later on in life. So basically it would be distributed, but they would just pay taxes on that property and then they would have it retitled under their personal name and out of the IRA. That's totally doable. We see a lot of people that do that.
And that's a good point. Let's say you're trying to buy a place that would be your dream retirement home, right? At 59, and for a lot of us, 59 and a half is not that far away. It's not a never, right? So you could buy something that you may end up taking it out of the retirement account at 59 without penalty.
But in the meantime, you're letting your Airbnb guests pay your mortgage,
Right.
put more money
Right.
into your IRA.
That's actually a great point, right? So let's say you wanted to retire in Hawaii. You could take those IRA funds, put down a deposit, buy the place in Hawaii, have guests pay your mortgage for the next 5 or 10 years, appreciate the property, and then take it out and move to Hawaii. Let's go.
I'm thinking more Chesapeake Bay, but Hawaii is an option.
Our listeners might prefer Hawaii.
That's true.
Are there any specific tax advantages to owning an Airbnb inside the self-directed IRA that make this strategy especially compelling?
Well, if we look at the long-term ownership of real estate inside of an IRA or an IRA LLC, just the fact that you have the rental income coming in on a monthly basis, and then you have that final sale of that property also. So all that's flowing back into the IRA, and it's not going to be subject to the capital gains taxes and personal taxes until eventually you pull it out later on. So it generally does save a lot in taxes in the long term.
Yeah, and that's a further compounding, right? Because you're not paying the taxes on it. That's awesome.
All right, to wrap this, your number one piece of advice for someone listening right now who wants financial freedom through Airbnb investing, but just feels overwhelmed by the idea of setting up this self-directed IRA.
I would say it's not as hard as it seems. It's really quite easy to get that process in motion. It's becoming more and more popular every year. It's something that a lot of people are starting to do a lot more of versus just owning it in their personal name or their own personal LLC. So I definitely say it's always good to get everything in motion and not just wait and think about it forever. So if you want to do it, might as well start exploring and then move forward if it makes sense.
And I realize everyone's different, but for example, if you're a person who is looking at a potential property right now, how fast, like ballpark, how long would it take to set up the self-directed IRA to be able to purchase it and begin letting that cash flow into their IRA?
There's a couple of things in play there. You'd have a transfer or a rollover that would occur to fund the IRA to come in the door. Just to break that out, if you start the application for the self-directed IRA, we generally get that open within 1 business day. So the account's then open. We're then going to put the transfer or the rollover in motion. So for people who might not know that terminology, a transfer means that I'm transferring from one IRA to another IRA. So I'm just doing a direct transfer. A rollover means if I have a previous employer plan, like a 401k, 403b, then that's going to be a direct rollover to an IRA. For most IRA to IRA transfers, we generally say it's going to be anywhere from about 4 to 7 business days for most companies to fund the account. So them sending the money back to Advanta. And then rollovers generally take a little bit longer. We say 1 to 2 weeks. It really depends on the provider and how fast they're going to process that and send it over. So basically, you could have everything up and running within about 2 weeks, all set, ready to go. If you decide to go the Checkbook LLC route, that does take a little bit longer too, with just like the state filing and registering for the EIN number. So you might want to give yourself about 3 weeks total in that scenario, but 2 to 3 weeks basically would be the general term that you would think about.
That's way faster than getting a traditional loan.
That's a great point.
Exactly.
All right. Oh, and this has been great. How can our listeners get in touch with you to explore if this option's a right fit for them?
Just shoot me an email. So it's my first initial last name at advanceira.com. So that's OLYNNADVANTA IRA.com. You can also give me a call in the office here. My direct line is 727-221-0095. If you want to walk through a certain scenario, I'm happy to break out the numbers with you.
That's awesome.
Listeners, give them a call and tell them that the Tate sent you.
Thanks, Owen.
Thank you guys.
If you started this episode feeling left out of the Airbnb investment opportunity because of a lack of finances, we really hope you now have a new way to become an investor. Please subscribe to the Host Coach Show and share this episode with anyone you know who might benefit from it.